Kalen, how you doing?
Doing well. Thanks for having me.
Yeah, appreciate it. So appreciate you coming in to the MySBA Loan Pro Podcast. The MySBA Loan Pro Podcast is the longest running SBA serial podcast. And I'm excited to have you here to talk about business acquisition financing. Specifically, what we're going to do is talk about the self-funded searcher. And if you could, talk to us about your career and how you got to this point.
Sure. Yeah. So again, thanks for having me. My career has been in SBA lending for almost the entire time as a banker. I started about a decade ago, actually came from outside banking, working with small businesses, being inside of them with an accounting background. And as I got into banking, realized that the SBA and helping small businesses was just a real passion of mine to make sure that we're being able to help these small businesses succeed. Started at a mega bank, right? And worked through some of that. So I didn't know what else was out there. Went through ups and downs, but definitely had a lot of my early success there and cut my teeth as I walked through that process of closing a deal at a large bank. About 3.5, almost 4 years ago, during COVID, actually, I transitioned to Live Oak Bank. And it's been a real lift for me because there's a real attention to service and closing, that meeting the customer's expectations, which takes a lot of the stress out of the deal. And so that's been a great transition from what you might get when you walk into a large bank in a branch to a branchless bank that only does this thing and does it well.
So you and I have done a lot of transactions and
Definitely.
a lot of complex transactions. And one of the things that always makes me excited to work with a business development officer is when they say they have an accounting background. And believe it or not, I do work with a few others in other spaces, not necessarily SBA, who have those accounting backgrounds. And I can tell you that gives you a leg up on other individuals in your space.
Yeah, I mean, I think all deals are going to start with the numbers, right?
Mm-hmm.
So let's make sure the math works. In fact, I like to make sure the people I work with understand the math too. So if we're going to lend to them, the math is one of the number one things. Like, hey, if the numbers aren't there, let's understand why, and then or let's change the deal or not do the deal so that we are efficient and also something that services the loan for the bank, because ultimately we're trying to get approved.
Yeah. And so we're going to dive into the details of acquisition financing. We're going to dredge up what is a strong self-funded searcher, possibly what is a weak self-funded searcher. But one of the things that I like, and this is for the audience, right? I want them to know this. So when I work with you, you're going to tell me yes or no. I'm going to try to give you the best loan package I can. And you are going to tell me yes or no very quickly. And even more than that, when you tell me yes or no, if you tell me yes, it's 99.9%. The bank is also going to say yes. I only say that to leave a little bit of room, but you've never not done a deal. So we have 100% closing record when you said, Ryan, that's my deal. And so being able to identify what your bank wants, being able to identify the specific deal parameters, and either moving it into the bank or moving it out as quickly as possible is something that you do as well as anyone. In fact, there might be one other person, but he doesn't play in your sandbox.
Sure.
And so you're the best at it where you are. And I really appreciate that.
Yeah, I mean, thank you. That's very kind. I mean, I try, right? I think in this business, the reputation is all you have, right? And saying things to say things isn't going to get your deal closed. And when it comes to acquisitions and more complex structures, there's a million ways that I found this deal is going to die. But when you know it's a deal and you know you've done the work up front, and honestly, the institution has a process so that you can get the deal done up front, and having that confidence to close, it eliminates a lot of the pitfalls that you might find later on. So I mean, you could probably attest to this. Some of the things we do up front, I might ask a lot more questions than some other people. I might dive into the financials a little bit more in depth. I mean, this isn't an underwriter yet. This is the loan officer saying, hey, these are the things I want to address. But that's because we're up front. Not only are we going to try to be competitive, but we need to be right. This is a real business. This is a real person. They have a real family. And saying yes and then getting a no can do serious damage. And so we want to make sure that if we're going to make a commitment, that we know exactly what that means And yeah, 99.9. I'm sure there's always scenarios where things will happen that we didn't know about. But having that success rate up front and a bank that wants to know up front, it's start to finish. The process is going to be not just me saying, I think I'm going to be right, but let's go make sure I'm right, so that I go to Ryan or anybody that's coming to me, Mr. Borrower, and say, hey, I've already looked at this. So has this person. They have the authority. So when we come back around to our approval, right? This is going to get done. So the rest is here's the process. Here's what we're going to do. So I appreciate that. I think that's super important and hopefully differentiates for some of the experiences people can go through.
Absolutely. And so what I want to do now is talk about that self-funded searcher who comes to you and they're not ready, right? It's DOA. You have to have that conversation with them. Thanks for coming to me. I appreciate it, but you are not a candidate to acquire a business. What does that individual look like? And then we're going to transition to the exact opposite side of the spectrum, which searchers that come to you are ready. So let's start with those that are DOA on arrival. You tell them, hey, look, you're not ready yet.
Yeah, well, let's just start about what is a searcher, right? Let's start with the definition. I think, a self-funded searcher, someone that says, hey, I have the money and I have the experience. That's what I like to call a buyer. These people they're searching for a business. They have the money, they have the resources, but most importantly, they have the experience. So the ones that are DOA are the people that come in saying, I don't have the money. I want 99% financing and I don't have the experience. In fact, I think I can run it remotely. Those ones are pretty much dead on arrival. I think they're going to learn, if they do get a loan from whatever institution, that it's a lot harder than it sounds. So the ones that are self-funded, those are the ones that they have the chops, they have the track record, and they can speak to the process themselves of how they became successful. It's a lot more believable when they've done it before, right? And so, yeah, I think that self-funded searchers are our classic buyers, and we want to find those guys.
So there's a lot of buzz out there on X, LinkedIn, just Google in general, that you can buy a business with 0% down. And what I think, because I've met these people, I'm sure you have too.
Yeah.
What they hear is you can buy a business with 0% down, but in addition to that, it also means that I don't have to have any money, because right. those two things are completely different, right? So someone might be able to acquire a business with, let's say, a little down, but it doesn't mean that they have $5,000 in their checking account and they're going to be able to get past underwriting and close that loan.
Right.
What it means is the SBA has some rules that allow, for example, a gift letter, for example, right?
Right.
Or investors, or you can use a home equity line of credit. Right. So there are different ways that you can accumulate liquidity. But if someone says, oh, wow, I heard that you can obtain SBA financing with 0% down, that also means that I have 0% in my bank account.
Right.
That is not correct.
Right? Yeah.
That's wrong, right?
Right.
Right. And I see this groundswell of individuals, and I saw an X about 2 days ago where some professional service providers in our space, now when they get a call from a recent MBA, they won't even talk to them, because that's the scenario. So they're a recent MBA, they think they have the chops, but they also have debt and they have very little liquidity.
Yeah. So, there's a lot to dissect there, I think. And starting with the people that don't have any money, I mean, that just goes back to, what are the resources and why are you going to be successful if it's hard to prove that you've been successful before? That's something that's very important to all credit teams, and saying, what are they tied to? What are they invested in this? And are they going to go ride this through thick and thin, through the tough times? And a lot of times, if they have some money invested, that's going to be, yeah, I want to recoup my investment. But for those that don't have money, but maybe they do have a good track record, or maybe they do have resources, that is a potential path. I mean, there are deal structures that the SBA will allow. Everything's going to come down to this credit decision of, okay, what's the whole picture? But I think we would discourage the people that are marketing, saying, hey, you don't need any money or assets to own a business. And, a lot of times they're looking at a business that's like, hey, it's making $500K, but it's not leveraged yet. And so you're going to go put 90 to 100% leverage on this thing, and it's not going to produce the same result that you thought it was because you got to service that debt. And in the J curve, right, where business comes down and then back up, there's really very little margin for error after you put that leverage on it. And so helping educate people why that leverage matters. But like, you can do some cool scenarios with financing that is highly leveraged, and that's what the program's for. But, for those that are out of college saying, I have my degree, we finance some of these deals, but they're usually bringing strength with it.
Yeah.
And so I want to make sure that we address experience is one of the key things to getting a deal done. Just because you have access to resources doesn't mean that you have a demonstrated track record of experience, which is the largest indicator of whether you can do something or not. If you're going to tell someone, hey, I can go swim in the deep end, it's like, well, let me see it first. I want to see that before, or at least have some kind of evidence that you can swim so that you don't drown. That's going to be what we try to encourage in those deals. Like, hey, what else is there to make sure that you have a path to success? And really it's on them to tell you, right? They got to have the story. They got to have the team. And, a degree is one part of it, and that's great, but it's not the only part.
And so you've done a lot of loans for buyers. Talk to us about those buyers that come to you, and in that first conversation, you say, I'm closing this deal. You just know it. Like you said, they have the chops, they have the credibility. Walk us through, what is their education? What is their experience? What level of management have they been able to demonstrate? What are other intangibles, for example, sales, marketing? If you could break down what the buyer looks like, that you just know, I'm going to get that. And then also liquidity, right? Talk about that as well.
Right. So if I were to put order of importance, I always start with math needs to work, right? Down payment, liquidity, all needs to work. What the requirements are, like, that's very simple, very quick. That's what we vet deals on all the time. But the first thing I look at with someone is management experience and what's their story. So if someone comes in saying, hey, I want to buy this auto shop, I've ran this other auto shop, or I've been working at an auto shop for 20 years. It's like, great. Were you the manager? Were you a technician? What level of role did you play? And if they have experience doing the same thing, then it's like, check, let's move on. In addition to that, if that's a direct experience kind of situation. If you got direct experience, great. If you've worked in the business, if you've worked in another business like it, that is the number one thing we're going to look for. It gets more narrative when you need transferable experience. So someone will say, well, I feel like I could do it because I have a history of doing things similar to that. And so you kind of dive in and the question will become like, how similar was it? And so hopefully they're going to come with a story saying, I've ran this business with a similar number of people. It's the same kind of industry that I'm used to working in, or maybe there's some similarities. And you try to avoid the ones that say, well, I've been doing this, which is, let's call it white collar, and I think I can go buy a blue collar business and be successful, or vice versa. We want to have some story of like, will there be a mesh of synergy between this strategy? So I think in trying to find the right experience narrative is going to be key. And the ones that I know are going to get done are the ones that are like, I've been doing this forever, right? Yeah. Easy deal. Let's move on. Let's check the math.
And talk to us about, so I know when I'm looking at a loan application, I go to their personal financial statement. And obviously I look at, okay, how much liquidity do they have, whether that's checking, savings, money market. I also look at their retirement, but I also look at their tax returns. And when I see tax returns, I will overlay that with where they live in the United States, right?
Right.
Because if you live in San Diego and you show me a tax return where you make $79,000, that's really weak.
Right.
Now, if you live in Alabama, I've had people say, Ryan, I can live, I've got a beautiful home, and I have extra money, right? So we have to keep that in context. What do you look at when you're looking at their personal financial statement, when you're looking at their tax returns? And then also, can you talk about what you're looking at when you're looking at their resume?
Yeah, absolutely. So starting with the financial statement, I think when I look at a buyer, I like to jump to the liabilities first.
There you go.
Right. I like to say, okay, how does this person manage their personal debt? And obviously that's going to play into our cash flow. So that goes right into that math conversation, but it paints a picture of how much they're willing to take on. And that's also going to drive how much we think they need to pay themselves once they buy a business. And so that's going to be where I make sure I understand the cash flow, because once that dies, the deal dies. Liquidity is very important. Do they have the injection? Do they have money post-injection, right? They might have just enough for injection, but then what? Then they can't feed their family, So we want to make sure that there's a little bit left over, and that they have a plan to keep that there so that we all have our rainy day funds. So between the assets and the liabilities, I'll start liabilities, calculate my officer comp, verify that with the tax returns, make sure the tax returns show, well, this is what they're used to making, and they've been able to pay these liabilities. And once I have that picture, I'll check into the resume and say, okay, does their resume back their story? And it doesn't have to be a perfect match, but a resume will tell you, here's what I've done, and here's what I are the skills that I've acquired. And that's easy to take that and put that forward with your narrative and say, yeah, I think they're going to be successful. The narrative is huge. We need to tell a story. We need to know exactly how their skills is going to transition, how that seller is going to help them build the missing skills, how they're going to replace the seller who we're taking their ad back and their salary, and what salary they need to pay themselves. And so that narrative is going to be key to being confident that they can run this business, because, it's not just about collateral, right? It's about actually being successful and getting that business to continue. It's the employees, it's everyone. This program's designed to keep all these people and their families safe and making their money.
What advice would you give to someone who calls you and you ask them the proverbial question, which type of business are you looking for? And they will say 80% of the time, I'm industry agnostic. What advice would you give to someone who tells you when they're searching for a business, I'm industry agnostic?
I would say that you need to do some more homework on what industries might fit, right? Industry agnostic is undecided, right? And to me, it sounds like they're not yet far enough down the path of knowing what they need to be successful. There's going to be industries where people say, well, that's simple, or that's going to be something that I can do with my eyes closed. But the reality when you get boots on the ground is that every business is a challenge. And so the closer it is to something that you have actual experience in, the better chance of your success. So industry agnostic, I think it's just a sign of you're not ready. And if you're not ready, that's okay. Let's help you get there. But let's try to define what that means, because when a credit officer looks at this, they're going to say, how did you get from A to B? And it really is up to the buyer to put that transition story there. And so I couldn't work in every industry, so I would never go to do that. So I'd like to understand maybe why they're saying that and dive in a little bit more.
Got it. Yeah, when people ask me, I don't offer free advice, but when they ask me, I'll say, okay, you asked me. And I love your answer, because that's what I tell them too.
Right.
I say, look, if you're telling me right now you're industry agnostic, what that really means is you're not set in yourself what you want to do. And so that creates a level of uncertainty. And what you'll probably do is you'll probably pass on every deal, not because they weren't good deals, but because they weren't the perfect deal. They weren't the right deal.
Right.
But I also tell people, when you narrow that search, I told someone this 2 days ago, I said, when you narrow that search and you overlay your track record, experience, your talents, what you love to do within a very specific search, and you find that business, you'll actually overlook a lot of the challenges.
Right.
Because you'll say, guess what? I know what I'm doing. I'm confident that I'm going to overcome those challenges. In fact, you'll probably say, yes, I've seen this, where your most intelligent, savvy, credibility laden folks that you've worked with will find businesses where there are some obvious cracks that they can exploit to turn that business around more quickly. What do you say?
Yeah, I think the same thing. It's if you're uncertainty, what does uncertainty equal? Risk, right? And part of owning a business is being a salesperson, right? And if you're trying to be a salesperson, really you got to sell me and the bank of why you're going to be successful. So starting out with uncertainty is probably not going to be successful.
Yep.
Because I'm going to say, well, I'm uncertain too. And until we're all certain here, we probably don't have a deal. And I agree. Once you start to get into the weeds and say you're passionate, you've met the seller, you feel like you can do that role, then you see the opportunity and you're ready to pitch that as a salesperson to the bank of why your narrative is going to work. And so let's focus, right? Let's be prepared. The bank for sure is not going to do it for you, right? It is the it is the opportunity and the job of that buyer to come in saying A plus B equals C, and this is why I'm successful. And so generally when I find that, I kind of put it right back at them saying, well, I'm ready when you are, and I'm here to help. But you know, it goes back to the buyers that just keep sending you sims saying, what do you think? Well, what do you think? You know, is usually what I say is, well, tell me what you think about it. Why'd you send it to me? Well, I want to know what the bank will lend. Well, nothing until you tell me why we should, right? And I want to do your deal. I want to help you. I'm not trying to be smug about it, but it really, you need to be prepared because this is going to be a long process, and it's going to be even harder to run that business. So let's work on it.
Yeah. Let's transition now to what does the process look like? So again, there's a groundswell of individuals who want to acquire businesses. We've just talked about what they need to do to get prepared. And then the next question that you and I always get is, how long does it take? Number one. And my answer to that is always, well, that really depends on the seller, because guess what? The seller is the one that's going to be providing the P&Ls, the balance sheets, the tax returns. Yep. They're the ones who are going to be answering the questions when the underwriter finds something that just doesn't fit, right? So a lot of that has to do with the seller, but also talk about step 1, step 2, step 3. And then I don't know if I've ever talked about this or been with someone where we've dug deep into the underwriter call. Can you talk about how a buyer conducts themselves on the underwriter call affects the deal overall?
Absolutely. So, you know, going to the beginning of the process, like we got a buyer, right? And they're looking for a business, and we can do some basic narrative and discussion on, okay, we got your personal financial statement. We know what you think you need to get paid based on that information. We got your resume. We can see what you're looking for. The bank supports you in your search. And oftentimes you need that support to get access to information. And the timeline of a deal is really dependent on how much access you get, right? And so a lot of times we're looking at high level information and everything's an assumption. And we're trying to get down to concrete information where everything's a certainty. And so I think early on in the process, there's no defined timeline until we have our package. And it's really easy to come to a conclusion if you have that access. So usually that buyer is working with the seller and trying to get more and more information. They're doing their own due diligence. And by the way, they're doing tons of due diligence past where the bank can go on the financial side. So getting comfortable and getting access so that we can come to that decision is who knows how long, right?
And talk about the tax returns, because they're so important, because a lot of times they'll send us a sim, or they'll send, oh, we have the P&Ls, and the P&Ls look like, oh my gosh,
this is amazing.
This is amazing.
Yeah, best deal.
And then talk about how sometimes that changes. And if you can, the difference, which I know you can, the difference between cash and accrual, and how sometimes that causes tension.
Yeah. So oftentimes, you know, we get P&L level, which is great. It's the books. It's the true operations. It tells you a lot about this business, but we are required to go off of verifiable information. And so part of that is using the tax returns. And so those are the truth. This is what we actually paid taxes to the government on, right? And we're utilizing a government program. And so very important that we utilize the information that we're reporting. And so we can make assumptions when we have P&Ls. And the assumption is, this needs to translate and tie to the tax return. When we get a tax return, it's like, okay, let's get started, right? This is where we get down to truth, because this is a source document that we're going to verify with the IRS as part of our process. So this is a true underwriting document that we can rely on. Now, we're going to go in there and pull the cash flow apart, and the tax returns, not to get too in the weeds, will tie out to your books. There's a schedule on there, and everything should tie. So it'll mesh together, but we want to get the access to that tax return so that we can say, okay, here's the true taxable cash flow, the income that they had, and we can do that math. Now, getting access to that is going to be a challenge, right? Because those are very private documents, and a lot of people are going to say, well, I wrote off a ton of stuff through my business. And that's fine. We all, a lot of business owners do. We're all looking for eligible write-offs. And we're happy to look at those too. We need to be able to document them and trace them back to the financials and say, okay, this is a true non-recurring item. So the process of getting those up front, I think, is crucial. If someone wants to get a bank's buy-in, then we should be getting those early, right? And that way we're not spinning our wheels until we find that there's a car crash at the end of this. Now, going to the accrual to cash thing, I mean, that gets, again, into the technicalities, but what you're reporting on your books for accrual may not be what you're reporting on your tax returns for cash. There is a tie, but accrual and cash are very different things on when money is being received and how expenses are being recognized. We would love to look at every business as an accrual because it's a true representation of matching business expenses and business income. But sometimes we have just tax returns that are cash, and we kind of have to make assumptions. Add backs are crucial, but also understand when we have the conversation with the seller of, for every dollar you add back, you're not getting as an add back. If it's not verifiable, you're probably losing a multiple of that dollar on your price. So let's keep it clean, simple, so that you have a nice path to approval and the highest valuation you can get.
Got it. Okay. And one of the things that's unique about Live Oak, in which I particularly appreciate, is that you have industry segmentation. So you have subject matter experts inside the bank. Talk about when you bring a loan in, you've gone through that preliminary process, how you're going to take that loan and send it to, again, a subject matter expert, and how that's different than other lenders who are only looking at these from a generalist perspective.
Yeah. With Live Oak, we have close to 40 verticals that have teams of underwriters that underwrite specific deals to that industry only. They know every detail about it, which will speed up the underwriting process. They understand the margins. They understand the typical revenues based on whatever type of business you're looking at. And it's just a very clean process when you're trying to vet a deal with more people buying into it early on. So instead of a general deal where you're learning a business from start and then you're trying to gather that and present it to the bank for approval, now you have a team of people that say, I know exactly what this business does. Let's get to a commitment letter and move forward. This looks like a good business. Or why are the margins off? How did that happen? That's important for a buyer because they might say, man, this looks great from a cash flow perspective. But then you have this industry expert saying, well, how? I'm not sure that's possible, right? Can we get some more questions? And it might be an unfortunate answer, or it might be something that, hey, this is a really unique business. You should strike. And that's going to be good to the process of helping the buyer and making sure that this is a safe deal, right? And I think the buyer appreciates that. I think the seller does from a timeline perspective. And having that support on my side is great because these people are experts all day, every day doing this job.
Yeah, and I've experienced both. So, for example, we've submitted loans to one of those industry verticals, and we've actually received information back that has confirmed this is a good transaction where the buyer might not even be as familiar as the bank is.
Right.
And that's confirmation to them. And then conversely, though, we've had it where we've received information, like you said, why are these margins off, or why is this not industry standard for this particular business? And what that's caused the business buyer to do is go back, have conversations with the sellers. We've been able to overcome that every time because, again, there is unique information.
Right.
But I think what that does is not only does it lend credibility, it also lends speed, accuracy to your process,
right,
but it also gives a level of comfort to the buyer that, because we know this, there are banks out there, right?
Totally.
That are rubber stamping.
Yeah.
Rubber stamping.
Right.
We need to sell this. We need to make money. We're rubber stamping.
Right.
And then 2 years later, guess what? All the socials are down.
Right.
The website's down
Right.
and they're gone. So that's something that Live Oak's been able to prove out, which I appreciate, buyers appreciate. And I think that's one of the major reasons why Live Oak does have such a great reputation. Now let's talk about when a buyer talks with an underwriter, because what I say is, and buyers, I always advise them, always be honest, but don't ever or rarely talk about hypotheticals that are going to happen in the future. That's the advice I give to them.
Sure.
Because they can say something that is a hypothetical. It's a thought, but they can say it to an underwriter who cannot unhear that.
Right.
And that could speak to character. It could speak to your stability as a person. For example, I've had people say, this is the first one, but I want to do 10 in the next 3 years.
Right.
And I say, whoa. If you say that to the lender, so talk about how a buyer conducts himself on the underwriter call and can negatively impact them or positively impact their deal?
Yeah, I mean, obviously, honesty and transparency is key. A lot of entrepreneurs have ambitions that are far beyond reality, right? I mean, we all want that, right? We all want to say, well, this is step 1, but when I get to step 10, I'm gonna be a billionaire, you know? And it's like, all right, well, let's just do one at a time here. And get you through that. And as you grow, we want to grow with you. I mean, we are known for doing the follow-up acquisitions. That is a Live Oak thing. We love continuing on where a lot of banks will pull back. We are not in the business of just rubber stamping a deal because maybe it has enough collateral, right? That's a disservice to the buyer and the employees of that business that might struggle because sure, they have a lot of collateral, but do we really want to take their home? Not really. And so when we focus on the buyer and we focus on the business and we have these experts behind us, making sure that this is a path to success. So when you're on the call with the underwriter, like I usually say, just focus on what's in front of you. And you're not going to get to step 10 until you do step 1. You might say, this is what I want, but is that really necessary? Because that might not be what you want. What we want is definitely different from the path we usually take, right? Because that's pie in the sky if everything's perfect, but this is a small business, so it's probably not going to go that way. With an underwriter, I think just being ready and knowing what they want to ask, having that conversation with a buyer and saying, what do you think they're going to ask you? What would you ask you? What are you worried about on this deal? That's what they're going to ask, right? We have those conversations before we submit to underwriting. I usually try to make sure that that's done well in advance. We are trying to show the credit team before we get to underwriting, we know the entire deal. And you do too, right? As a buyer. And that way you're not worried about that call. You're going to have that call. It's going to be very simple. They're going to follow up for whatever questions they might have, but you're not going to get caught off guard because you're ready. That's part of our process, is to make sure you're ready. Otherwise, maybe we should hold off on submitting that deal. So definitely stick to the plan and don't go crazy with projections and other things that are saying, well, I'm going to make, $1,000 this year and then 10 million next year. Like, let's be realistic, right? And that way because realistic people make realistic decisions. And that way we know when you do have those hard decisions as a business, you're going to take a realistic path. Yeah. And so that's kind of how I would approach it.
Wonderful. Thank you so much for sharing that. And so now we're going to transition where we're, let's say, in underwriting and there's a brick and mortar involved. Talk about when and how a buyer should engage the seller to engage the landlord. And then if you can talk about life insurance as well, and what's the timing there, and how long does it usually take for someone to apply for life insurance and receive the assignment of collateral or the collateral assignment.
Yep.
And then what if, because I'm sure you've dealt with this, I've dealt with people who have a very long medical file and they're not able to obtain life insurance. How does the bank react to that?
All right. So starting from the landlord discussion, I mean, my opinion is that it needs to be early and often, right? We need to let the landlord know, here's our plans. They have a role to play. They need to sign the landlord waiver, which would give the bank the rights to enter the property should there be a case where they needed to for the assets that we leaned upon, that we lent upon. Also having the conversation with the landlord of, hey, this is a 10-year loan for a business acquisition. We really want to have 10 years on this lease. And if you don't, we should have that conversation. Can we get it? And what happens if we don't? Because if this thing expires year 5, where does your business go? Have we thought about that? And we need to do our due diligence for that scenario. Another thing is cash flow, right? If we don't know the landlord's on board with renewing, how much are they going to charge you? And that can sneak up on you at the end of saying, well, it just went from $5,000 a month to $10,000 a month, which kills your debt service. And how are we going to get this deal done? You're not going to be able to afford this, and this landlord's not playing ball. What's the plan? So that is something that should be really at the beginning of a deal, in my opinion, so that there's clarity that this is not going to be that easy. If they want to get down the road, that's fine, but it's just going to be time at the end of the deal that we have to then maybe cross a path that we can't cross or solve it and just a little bit more bumpy. And to your next questions on life insurance. So life insurance is interesting because, it can be super easy. It can be super hard. Everyone has their agent that they want to call, that they've maybe they already have life insurance. Well, my first thing for life insurance is if you already have it, it's probably for a specific purpose. We really don't want to assign the life insurance you had for your family in the case of a tough event to the bank.
To the bank, yeah.
You know, but we do need to cover what the SBA would require in terms of life insurance. So let's get you through that process. And a lot of people will come to me and say, well, I got my cousin, he's an agent, so it'll be no problem. I strongly recommend you use someone that works in the SBA field that can produce policies at speed. Life insurance carriers can vary, and some of the bigger ones can be tough to get a hold of. And we need to have a collateral assignment. And sometimes they'll say, hey, your life insurance is good, but they're not willing to bind or provide collateral insurance for 30, 60 days because that's how their process works. So is your selling, are you willing to wait? You know? And so I would refer you to someone that knows the carriers, that know the SBA rules, that are willing to deliver. How long does it take? I mean, I've seen them overnight. I've seen them take a month. It depends on the size. It depends on the risk. There will be situations where life insurance is unobtainable and we have to document our file and we have to explain that because it is a requirement of the SBA. But, you know, we're looking for a couple of decline letters before we go forward so that we know, hey, this is not possible. So we got to follow our rule book and then, you know, try to ensure that we can get it. I mean, usually we can, but there are cases that present difficulties.
Got it. And now we're at the end of the process, right? We've talked about origination. We've talked about how you underwrite initially, what you're looking for in a buyer. We've talked about the underwriter call. We've talked about some of those processes that are required by the SBA that can delay the deal. Landlords, life insurance, if you're not on top of it early and often. And now we're at the end, right? And we're signing loan documents. We're verifying the purchase agreement. We're making sure every I is dotted, every T is crossed, because this is a government loan.
Right.
So there is documentation. And I'm sure you've experienced this. I know I experienced this when people get to the end and it's already been a long process from finding the business to starting underwriting. And now they're at the end. They're usually very
exhausted.
Tired, exhausted. They have deal fatigue.
Right.
But then there's this surge of documentation. For example, they have to get liability insurance. They have to get workers' comp. So they have to herd all of these third-party service providers. Talk to them right now as you would coach them through getting through this process and working well with the bank. And here's what I see, and I don't know if you've seen this, but I've seen buyers when they're at the finish line, they lose patience with the closer. And one of the things that I remind them of is I say, look, your business development officer, not always, but most of the time, they're incentivized to move you through the process with compensation that's above and beyond their W-2. I don't know this, but I think I knew most closers are not, right? They're not originators. Right. They're not the reason why the loan is there. They're processing it. And they are at a critical juncture at the end. Everyone's tired. Everyone's ready to move on. And I always say to my buyers, hey, they're doing their job. They're doing the best of their ability. And by the way, you might not know this, feel like this, but they've got 10 to 15 other files they're working on. So if you send them documents and it takes them a day or two to get back to you, it's not because they were sitting with their feet up eating French fries in the break room.
Right.
They were processing other loans and yours came through the process. So talk to a buyer how to have that patience and intestinal fortitude at the end to make sure that they're a team player and they're not biting the hand that's literally feeding them.
Yeah, that's a good one. I have a ton of respect for my closing team. It's a lot of work, right? It is an SBA government loan that has a pretty incredible checklist to get through. I love the closers on my team. I think that they're the best in the industry, but the reality is they're people and they are trying to do what their job is, which is close your loan. They are not trying to not close your loan.
That's right.
Right.
Yep.
And I'm over here saying, yeah, let's close this thing. Right. But they got to do their job. We have to make sure we're documenting the file. And they are here to the end. And we want to be as nice as we can to them. But the way I usually form this up is saying, look, you're going to go through this approval process. Here's a pre-closing checklist. Just take a look. And if you want to tackle any of these items early, that's great. It's going to save you some headache later if you have capacity. But if we don't, or if we take time, or we start to push back on some of the items, it's just going to make everyone's life harder. And generally, it's going to take longer. So a closing process is to be the best friend of that person.
Yep.
And usually when I get the call saying, hey, I'm not sure, like I feel like I shouldn't have to do this, or how long do you think this will take? I said, well, I'm not the closer, and I'd like to give you my estimate because I do a lot of these deals, but why don't we just call the person that's here to help you and be honest and tell them what your concerns are? And we'll go to credit if we need to talk about something that you can't do. But ultimately, they know the answer and they're going to tell you straightforward, here's what I need by this date. And they are the most organized people in the bank. They, so we want them to really lay out the path to close and support them. That way, if you meet the items that they say, then we can hold them accountable. But usually they're not the ones holding up the deal. It's usually somebody like a third party, or it's usually someone like the buyer themselves, right? Where they're saying, okay, I'll give this, but I won't give this. When can we close? Well, until you give it all.
That's right. That's right.
And so once it's done, I guarantee you they have a date for you. And a lot of this stuff is out of our control. We got the seller, we got escrow, we got life insurance, we got entity formations, we got, all of these things that you're trying to do, which is not the closer. They're just saying, here's what I need. So supporting them in their job, or maybe just giving them the keys. A lot of people say, well, I want to do my own business insurance. All right. But if you just give your contact to them, they'll handle it. And you're now free of that task. And I think that's the best way. The most efficient way is to let the person who knows it, does it every day, do it. And that way you can rest and work on all the other items, or maybe the business that you're trying to do. That's your focus. And so I'm here to just make sure there's no fires at that point. If I can help get a task done for you, I'm here too. Right? Because at the end, I'm not out of the deal until forever. I'm going to call you 6 months after you close and make sure you're still good. Right? So I'm here to help, but that closer is going to drive, and we need to support them.
And the last thing I want to talk about, which is very important. In fact, this document drives the deal, but it's always changing as well. Well, it can, is the purchase agreement. So when do you like to get the purchase agreement? When does it need to be finalized? And again, talk to the buyer, because residential real estate agents will say a lot of times, this is the biggest purchase someone will make in their life, right? Which buying a house. Okay. Right. I understand. You work a W-2 job, you're not investing, you're not really buying. So you buy a house and it is a big purchase. In the business acquisition space, this is governed by very detailed legal documents. Right. And the buyers don't understand them. So you have attorney A, you have attorney B, and then let's say you have a listing broker, and they're all involved. Right. What, from a purchase agreement perspective, would you advise a buyer to be privy to, and how involved in that process? For example, I closed a loan about a week ago, and the lawyers were peppering the purchase agreement at the end with all of these new items. And every time the bank said, well, now our attorney has to review this, and they were getting mad at the bank. And I said, well, you're peppering these guys with brand new things. So talk about the purchase agreement, how important it is. Talk about how the buyer should be involved in that process to avoid all of these random changes happening that could affect them post-close.
Yeah, I think approaching the purchase agreement is crucial from the LOI. And so the better we define terms at the beginning is the easier it is to get to that purchase agreement. Almost all deals are signing and closing close to the end, but the attorneys haven't done their job yet, and attorneys cost money, and people don't want to spend the money until it's getting closer to the end. And then everyone's got to earn their money because they're also not free. So the attorney component, the seller has their interests, the buyer has their interests, and the bank has their interests on top of that, with rules of eligibility that need to be reviewed by an attorney, right? And so I'd like to say that if the terms are defined well in the LOI where they're not going to change to the purchase agreement, then the attorneys can do their job pretty quickly, right? So they're just addressing small tweaks. But if we haven't defined, let's call it non-competes, or let's call it transfer of assets, or what the assets are, the schedules of assets, or how the AR is transferring, which which party's getting first access to the AR and the working capital, because the bank underwrote to all these assumptions. So those kind of things need to be well defined up front of what that means, who gets first access, and is that eligible? That way, the final week or two, you're not doing that. And so we're just ready to sign at that point and making sure your closing items are checked and that your entity's created. And that stuff's, while it's daunting, it's remedial. And so you can get through it. It's just about getting through it. But the negotiations at the end, if it's not well defined, that could blow your deal up. You know, and that's the part where it gets really hairy when people are starting to say, well, that's not what we agreed upon. So hopefully those things are up front and we're not going to stumble over changes in material terms, because bank's going to have to review and see if new risks were introduced. And so hopefully it's not the last day.
Because as human beings, if we don't understand something, we typically don't get involved in it, right?
Right.
And so, but as a buyer, that document, the purchase agreement, is going to govern the acquisition, but it can also obviously affect them post-closing. So I hear what you're saying. Get involved, know what the terms are, and don't let the attorneys start to dictate the terms and turn this thing into a Wild West shootout.
Totally.
Yeah.
Yeah. The attorneys can always come in and there's a lot of great attorneys that know how to get to the end.
Yep.
There's also attorneys that come in that start to put protections that don't need to be put on potentially, or terms that are just unreasonable at the very end. And it's like, wow, this is gonna really kill the deal. Going back to the analogy of the home, it's a huge purchase. It's one of the biggest you'll ever make. Well, a business acquisition is, that's a contract. We signed, here's your price. I take it. Here are the things I need to get fixed. That is the opposite of a business acquisition, right? The business acquisition is a dance to the end. Yep. We're talking about how, not just how we're going to close, but how you're going to help me after we close, how we're going to transition, how we're going to introduce employees. I mean, there's so many facets to how this deal can unfold. We want it to be really defined. If we define it early, that the attorneys can only argue over their legal jargon rather than trying to redefine terms that might not have been discussed up front.
Got it. Well, hey, Kalen, thank you so much. We laid down a lot of good information. I know that buyers watching this will walk away more confident in how they approach buying a business, and that's all because of you. So thank you so much for being here, and you have a great day.
Yeah, thank you. Thanks for having me.